Good morning, traders. Today is Sunday, June 26th. I'm doing this special Fibonacci and TT Charger update for you for the S&P. We're going to focus strictly on the S&P today. I'm starting with this long-term weekly ES pound F, which is the S&P E-mini futures contract, showing you the TT Charger and Auto Trend Master, which is drawing these little color-coded blocks here. And it's showing you essentially that we've moved into a very strong bearish trending phase right here. You can see the MACD down below. But particularly what I want to focus on is that we are in a wave 4 correction that will not end or should not end until we see a substantial pullback back down into these 3,000 or 2,900 area of the S&P. And let me explain to you why Fibonacci is so important in understanding price theory as we move forward. So you can see that we've had these rotations, and I'll expand this out a little bit later to show you the wave count. But particularly, we're going to start here with this monthly chart, which is my Fibonacci Price Modeling system. And I want you to see the projected levels from this monthly chart peak. We have a projected early stage support level here, a long-term support level from the bottom, which occurred way back over here in December 2018. We have an intermediate support level here. So I've drawn a box around that area showing this now acts as a resistance channel. We now have a downward support channel right here coming off of this low in December, which acts as an intermediate term support level. And then we have much deeper lows way down here, which are, I'm ignoring these because this would be an excessive decline way down to, ungodly levels. And this is because the expansion phase from here to here, this represents essentially 160 to 200% downside move in Fibonacci. But particularly, we need to pay attention to this 3,600 to 3,400, and again, this area here, right in here, and I'll explain to you where this comes from. This comes from a different Fibonacci projection. So right now, we've come down, we've seen this downward move, we've seen a pretty strong upside move at the end of last week. But in reality, we're stuck between this resistance channel right here and this support channel right here. I don't believe we're going to be done with this move until we see a very big washout low back down into this 3,200 to 3,000 area. And if we move to the weekly chart, we're going to go out into extended trending, and I'm going to show you the Fibonacci system as we move forward. So now the Fibonacci system is projecting this downward channel here at 33.93 in this gray projected channel, and it's projecting resistance again back up here at 43.30, and then we have support here at 29 or 39.23, which is right where we closed on Friday. Expand this out. So now when I call this support, this acts as support or resistance. So this is a projected level from this peak here, showing us again that this should be a very strong resistance right in this 33.90, 33.25 roughly level. And it shows us that we have downward targets here at 35.68 and down here at 33.92. So my interpretation of this in a downtrend after establishing new lows, failing to get above this resistance at this point, suggests that we're looking at a rollover right near this blue projected level, targeting these downward levels here, which represents, again, about a 12 to 13% downside move. Now, we take a look at this from a shorter term basis. We'll go to daily. And I want you to see how these moves align, how these projected areas start to really target and align. So now we have these downside daily target areas. This is a daily chart. It's going to come up here off of a rotation, likely near this area. It'll update, move these target levels slightly lower in my projection. But this tells us that we have a downside support area somewhere around 3470, 3471, another support area at 3241, and another support area at 3073. In reality, the projected downside move from where we are right now could easily come to 17 to 21% downside before we find this support area. And remember, this really starts to play out in the real downside potential for this move as it unwinds. Let's go back to the monthly and pay attention to this blue area, because this blue area is ultimate support. And I want you to see this blue area right around, let's call it 3084 to 3000, plays out very strongly with my analysis of this move here. This is a 3000 roughly area, and this is where I believe downside move in the S&P must come to in order to wash out these lows. So understand that we are still 20+% away from, let me expand this out, draw a line, and to give you an example, we are still 22% away from ultimate lows in the market, which will complete a wave 4 correction. It must stay above these support levels. Let's call it 2,500, 2,640, somewhere around there. Very likely to stay in above these areas. I'll draw a little area right in here. Very likely to stay above those areas to try to find support and then form a wave 5 move to the upside. Now understand that wave 5 move to the upside will likely be similar to this wave 4 move. So if I highlight this, duplicate it, drag it back over here, you'll see that wave 5 to the upside should be around 2550 to 5600 to 6400 on the S&P, and that we will then complete this middle phase. Now understand, this is a wave 1 move to here. So this becomes wave 1. Let me see if I can, where is it? Here. This is wave 1. This is wave 2. This becomes wave 3. This should set up wave 4. And then this would end up being wave 5 up here. And I want you to understand then that we have a wave 5 peak, which will likely end and form some sort of a new wave correction, which could, if I eliminate these projected drawing levels, could potentially then retrace even deeper down into areas like this, which would be a fairly substantial downside move ending this rally phase. So what I'm looking for, ladies and gentlemen, is a pullback to these Fibonacci levels. Remember, these Fibonacci levels are projected right here on the monthly, weekly, daily S&Ps. And remember, the daily S&P chart is projecting these downside targets in this blue area, and they will move once this rolls over, which I expect to happen next week. I expect the markets to roll over and begin to move down. Understand that we do not have any bullish confirmation. We do not have any real strong trending yet. This is still in a bearish trend. This is a dead cat bounce or a slight reversion in the market. I expect this to roll over to the downside, attempt to target this upper area, potentially targeting down here in this lower area, 3,000 to 3,100 level, possibly even lower, and that will put us back into this area where I'm drawing here, the 3,000 to 2,900 area, ultimately setting up support, possibly near the end of this year, near November, December, January, maybe starting a fairly early Christmas bounce here and setting up a wave 5 peak somewhere up into this 65, 66, 7,000 area before all hell breaks loose. We end this rally phase, and this is the end, a big correction phase, which is going to potentially unwind in 2024, 2025. So Fibonacci is aligning. In fact, let's have some fun and take a look at a quarterly, assuming we have enough data, and see what's actually being shown. We do not have enough data. So let's try a 2-month. And we do have data for the Fibonacci system, and it is projecting a very strong downward trend down into this 1700 area. And if we go back to monthly, understand that this is projecting a much deeper downside move that aligns very strongly with this monthly downward data. So this would ultimately be the downside risk for a massive contagion event. This is the downside risk based on daily activity, which is our immediate downside target. This 3,000 level would really be the lowest area that I would expect price to go. Could go a little bit below it, but if a contagion event were to happen, we would be looking potentially at the 1,700, 1,600 area on the S&P, and this could be a very deep downside move that I expect could happen. Now, again, I'm highlighting this chart because I want you to understand that I do not believe we are likely to see any downside move to this 1,500 area unless we see some massive Lehman moment or global unwinding take place, which could happen. I'd put that at a 50-50 estimate right now, depending on what the Fed and the global central banks do. But my estimate right now is this 3,000 level, 2,900 level, and then we'll likely find some support and attempt to move to wave 5 peaks way up here. If we see global unwinding, things get really out of control, then yes, this 1,700 area starts to become a very strong target for downside price trends. And as you can see, we're in a rotation to the downside. We have no clear support. We would have to see the S&P move above this 4,500 level at this point to confirm any new upside potential. So if we take a look at weekly, let's take a look at the data to see where we're looking for upside confirmation. Wait for it to load. We need to see it move above this level, 43.70 roughly, for upside confirmation. This gives us temporary upside confirmation at 41.72. Still a long ways away from that, 600-700 points away from that. And if we look at daily, confirmation of Fibonacci price reversals, our downside is right here at 37.23 roughly, and upside confirmation is way up here at 4,200. So we've got a long way to go, ladies and gentlemen. We're in a solid downtrend. Do not try to buy into this downward sloping market. We do not have any confirmation of any real upside move yet. This is just a dead cat bounce. And Fibonacci price analysis and price theory is telling us that the 3,000, 2,900 to 3,100 area is our next downside target. So there you go. Long-term Fibonacci analysis and short-term Fibonacci analysis is confirming this 3,000 to 3,100 target area. We are now at 3,900. Understand that's a 900-point decline in the S&P. That is a 15 to 25% downside move, which is pending. So do not get married to any long positions.